What if I told you that billionaires know something about 2026 that you don't? While everyone's chasing the next hot stock, the world's wealthiest investors are making moves that could define the next decade. Today, I'm revealing 15 secret strategies they're using right now. Let's dive in. Here's something that'll blow your mind. Warren Buffett is sitting on $381 billion in cash right now. That's more than the entire GDP of countries like Finland or Portugal. But why? While Wall Street's buzzing with activity and everyone's fully invested, the world's greatest investor is doing the opposite. He's building what I call a cash fortress. Let me break down the numbers. The S&P 500's dividend yield is at 1.17%, levels we haven't seen since the dot-com bubble. Translation? Stocks are expensive. But here's the secret. Cash isn't just sitting there doing nothing. It's ammunition. When the market crashes, and history tells us it will, Buffett will have the firepower to buy incredible companies at bargain prices while everyone else is panicking. Think of it like this. In a gold rush, cash is king. Not when everyone's buying, but when everyone's selling. This strategy requires patience. It requires discipline. But most importantly, it requires understanding that sometimes the best move is to wait. Because when it rains on Wall Street, those with cash are the ones with the umbrellas. If building wealth was as easy as pressing a button, you'd do it, right? Well, subscribing and hitting that like button is just as easy. And it helps us bring you strategies like this every single week. Do it now. Strategy number 2. While everyone's buying AI stocks like Nvidia and Microsoft, billionaires are investing in something even bigger. The pipes, the infrastructure, the backbone that makes AI possible. And JP Morgan predicts over $5 trillion will flow into this sector by 2030. Here's what most people don't know. AI is hungry, incredibly hungry for power. A single ChatGPT query uses 10 times more electricity than a Google search. That means data centers, power grids, and energy infrastructure are about to experience unprecedented demand. Smart money isn't just buying the AI software companies. They're buying the electric utilities, the data center REITs, and the companies building the infrastructure. Because when AI needs power, someone's got to provide it, and they're going to charge a premium for it. This is the real AI gold rush, and you're early. Just like AI infrastructure powers the future, your subscription powers this channel. Hit that subscribe button and turn on notifications. You won't regret it. Number 3 is a $150 billion opportunity that most retail investors can't even access. Yet, while traditional banks are pulling back from lending, private credit firms are stepping in, and they're making a killing. Here's how the ultra-wealthy are playing this game. Meta just raised $29 billion in private credit for AI infrastructure. Not from banks, from private lenders. Why? Because private credit offers better terms, faster deals, and higher returns for lenders. And here's the kicker. While savings accounts pay 4%, private credit deals are yielding 9 to 12% annually with stronger protections. Now you might be thinking, this sounds great, but how do I access it? Business development companies, or BDCs, and private credit ETFs are making this available to everyday investors. The door is opening. The question is, will you walk through it? Knowledge is power, but only if you act on it. Like this video if you're learning something valuable, and subscribe so you never miss an opportunity like this. Strategy 4. Warren Buffett calls it worthless. Ray Dalio says put 15% in it. They're both talking about gold. And right now it's hitting all-time highs above $4,300 per ounce. So who's right? Let me show you what the smart money is actually doing. Here's a stunning fact. Central banks now hold more gold than U.S. Treasuries for the first time in modern history. That's not an accident. With $36 trillion in U.S. debt and inflation concerns, gold is insurance against currency devaluation. But billionaires aren't just buying gold bars. They're diversifying through mining stocks, gold ETFs, and even royalty companies that profit from every ounce mined. Ray Dalio's hedge fund allocates 7.5 to 15% to gold as part of what he calls an all-weather portfolio. The strategy isn't about getting rich. It's about staying rich when everything else falls apart. Think of gold like fire insurance. You hope you never need it, but you're glad you have it when the house is burning down. And right now, billionaires are buying that insurance. If you're enjoying these billionaire secrets, show us by smashing that like button. And subscribe, because we've got 11 more strategies that could change your financial future. Here's a controversial truth. Your 50 stock portfolio might be your biggest mistake. Warren Buffett's entire portfolio? Just 10 to 15 stocks, and he's worth over $100 billion. This is strategy 5, concentration over diversification. Let me explain the math. If you own 50 stocks and one doubles, it barely moves the needle. But if you own 10 stocks and one doubles, that's a 10% portfolio gain right there. Buffett says, diversification is protection against ignorance. It makes little sense if you know what you're doing. The key word, know. This isn't about gambling on 10 random stocks. It's about deeply understanding 10 great businesses and having the conviction to hold them. Think quality over quantity. Would you rather own small pieces of 50 mediocre companies or meaningful stakes in 10 exceptional ones? The billionaires have already made their choice. Concentration creates wealth. So does your support. One click to like, one click to subscribe. Small actions, massive impact. Do it now. Number 6. While tech stocks are at all-time highs trading at 35 times earnings, value stocks, banks, industrials, energy, are trading at levels we haven't seen in a decade. And PIMCO says this is one of the biggest opportunities in years. Here's what's happening. Everyone's piled into the same 7 tech stocks, the Magnificent 7. But markets cycle. They always do. And when they do, the rotation from expensive growth stocks to cheap value stocks can happen violently and quickly. Energy companies, traditional banks, manufacturers, these aren't sexy, but they're profitable, they're cheap, and they're where billionaires are quietly accumulating positions. The strategy is simple. Buy what everyone hates when it's cheap and sell what everyone loves when it's expensive. Right now, value is hated, and that's exactly why it's a buy. Markets rotate, and so should your attention, toward that subscribe button. Hit it, along with the like button, and let's keep building wealth together. Strategy 7. U.S. stocks are expensive. International stocks? They're on sale. Morgan Stanley expects international markets to outperform U.S. stocks in 2026, and billionaires are already positioned. Here's where they're putting their money. Japanese stocks are trading at 14 times earnings versus 22 for U.S. stocks. European stocks are even cheaper. But it's not just about valuations. Emerging markets like India are growing at 7% annually, while the U.S. is at 2%. Plus, the dollar is weakening, which means international investments get an additional currency boost. The billionaire move? Allocate 20 to 30% to developed international markets and 10 to 15% to emerging markets. Don't just bet on America. Bet on the world. If this global perspective is opening your eyes, open the like button and the subscribe button too. Your portfolio and this channel will thank you. Number 8 is massive. Data centers now need more electricity than small cities. 150 gigawatts of new power capacity needed. That's enough to power 150 million homes. And billionaires are betting big on whoever can provide it. Here's the opportunity. AI needs clean, reliable, 24/7 power. That means natural gas, nuclear, and renewables, not just solar panels. Tech companies are signing 20-year power purchase agreements at premium prices. Microsoft just committed to reopening 3 Mile Island's nuclear reactor. The investments aren't just in power generation, they're in grid infrastructure, battery storage, and transmission lines. Every data center being built is a guaranteed customer for utilities and energy companies. This is structural demand, not cyclical. And it's just getting started. Energy powers the grid. Your engagement powers this channel. Like, subscribe, and let's keep the momentum going. Strategy 9. Ray Dalio's secret portfolio made money in 85% of years, even during the Great Depression. It's called the all-weather portfolio, and here's how it works. 30% stocks, 40% long-term bonds, 15% intermediate bonds, 7.5% gold, 7.5% commodities. The genius? These assets perform differently in every economic environment. Growth, stocks lead. Recession, bonds protect. Inflation, gold and commodities shine. You don't need to predict the future. This portfolio thrives no matter what happens. Studies show it delivers 7 to 9% annual returns with half the volatility of a stock-only portfolio. This is the ultimate sleep well at night strategy, because whatever storm comes, you're ready. Peace of mind is priceless. So is good content. Give us a like and subscribe. It's the easiest investment you'll make today. Number 10. Wall Street giants fight over mega deals worth billions. But the real money? It's in companies you've never heard of. Middle market businesses with $10 to $100 million in revenue, often family-owned, always overlooked, and massively profitable. Here's why billionaires love them. Less competition, better valuations, and higher returns. Partners Group data shows middle market private equity returned 181% over the last decade versus 141% for large cap PE. Plus, these businesses often have founders with skin in the game, meaning they care about outcomes, not just quarterly numbers. You can access this through business development companies, middle market focused funds, or private equity ETFs. While everyone's bidding at the auction, smart money's making private deals behind the scenes. Be where the competition isn't. Finding hidden opportunities takes work. Supporting this channel? One click. Hit like and subscribe, and let's uncover more wealth-building secrets together. Strategy 11. During market crashes, most stocks fall 30 to 40%. But these boring stocks? They actually hold up, and sometimes even go up. They're called dividend aristocrats, and Capital Group data proves they outperform by 67 basis points during negative market months. What makes them special? These companies have raised dividends for 25-plus consecutive years. That means they survived the dot-com crash, the 2008 financial crisis, and COVID. They're profit machines. Johnson & Johnson, Procter & Gamble, Coca-Cola, companies so stable, so profitable, they pay you to own them. And every time you buy their products, you're reminded why they work. The returns aren't flashy, but compounding dividends over 20 to 30 years, that's how generational wealth is built. These aren't get-rich-quick stocks. They're stay-rich-forever stocks. Slow and steady wins the race in investing and in building a community. Like this video, subscribe to the channel, and let's build wealth the right way. Number 12. Imagine getting paid every time someone streams a song, uses a patent, or mines gold. That's royalty investing. And Partners Group estimates it's a $2 trillion market. Here's how billionaires are tapping into it. Royalties come in many forms: music streaming rights, pharmaceutical patents, mineral rights, even sports licensing deals. The beauty? You get paid without doing the work. The oil company drills, you collect. The pharmaceutical company manufactures, you collect. The artist records, you collect. And the cash flows are predictable. When someone uses the asset, the meter runs, and you get paid. You can access this through royalty companies, streaming companies like Franco-Nevada for gold, or specialty funds focused on intellectual property. It's the ultimate passive income strategy. Passive income is great. So is passive support. Hit that like button without even thinking about it, and subscribe for more money-making strategies. Lucky number 13. While markets go sideways, these investors are collecting monthly checks. The secret? Options income strategies. With volatility expected in 2026, covered calls and cash-secured puts can generate 6 to 12% additional annual income on top of your existing holdings. You're getting paid for volatility instead of being scared of it. Options are complex, but supporting us is simple. Like and subscribe so we can break down more advanced strategies like this for you. Strategy 14. Mexico is quietly becoming the next manufacturing powerhouse, and smart investors are already positioned. After years of relying on China, companies are moving production closer to home. This is nearshoring, and it's a multi-trillion-dollar trend. Supply chain disruptions taught companies one lesson: proximity matters. Mexico, Vietnam, and other nearshore locations offer lower costs, faster shipping, and political stability. Companies like Tesla, Apple suppliers, and auto manufacturers are building massive facilities. VanEck highlights that nearshoring benefits manufacturers, logistics companies, and industrial REITs in these regions. The wave is just beginning. Position yourself now before it's obvious. Nearshoring brings manufacturing home. Your like and subscribe brings value to our community. Make the move now. Final strategy. Why pay taxes on investment gains when you can legally keep more of what you earn? Municipal bonds offer tax-free income, and for high earners, the math is stunning. Here's how billionaires use them. A 4% municipal bond yield is tax-free. For someone in the 37% federal bracket, that's equivalent to a 6.3% taxable yield. You're making more by paying less in taxes. Plus, these bonds fund essential infrastructure, schools, hospitals, roads, so you're supporting your community while building wealth. Focus on high-quality, AAA-rated municipal bonds or muni bond funds. The tax savings compound over time, especially in high-tax states like California and New York. This is how the wealthy stay wealthy, by keeping more of what they make. You've just learned 15 billionaire strategies. Now here's your strategy. Smash that like button, subscribe, and turn on notifications. Your future self will thank you. So there you have it. 15 secret investment strategies billionaires are using to position themselves for 2026's markets. From building cash fortresses to tapping into AI infrastructure, from hunting middle market deals to collecting tax-free municipal income, these aren't get-rich-quick schemes. They're get-rich and stay-rich strategies built on patience, contrarian thinking, and long-term vision. Remember, billionaires think in decades, not days. They're greedy when others are fearful. They deeply understand what they own. And they always protect capital first before chasing returns. Now I want to hear from you. Which of these 15 strategies surprised you most? Which one are you going to research deeper? Drop your thoughts in the comments below. And if you found value in this video, do 3 things. First, hit that like button. It helps more people discover these strategies. Second, subscribe and turn on notifications so you never miss our next breakdown. And third, share this video with someone who's serious about building wealth. Knowledge is power, but shared knowledge creates communities. I'll see you in the next one, where we'll be breaking down even more ways to think and invest like the ultra-wealthy. Until then, stay strategic, stay informed, and remember, the best investment you can make is in yourself.